Good morning, traders. Welcome to today's market review. This is Fred Razak at CMTrading. Today is July 31st, 2018, and today is Tuesday morning. So looking at the economic events of the day, tentatively earlier this morning out of Japan, we had a monetary policy statement coming out. Now we'll take a look at the Japanese yen in just a moment. And then at 2:30 South African time, monthly GDP numbers coming out of Canada. And lastly, for today, consumer confidence numbers coming out of the United States, and that's at 4 o'clock. Now, that's a very important number, so just be aware of that number coming out. Now, looking into further this week, we have FOMC rate statement coming out tomorrow at 8 p.m. South Africa time. That's a really important item that's coming up for the summer. And then Friday again, NFP and some other Bank of England's, I believe, is coming out with a rate statement as well. So lots coming up as the week is progressing, and this may, look to be starting a little bit of a storm, okay, especially in the markets as things cook up. But let's see what's been happening in the markets until now.
This conference will now be recorded.
So we're taking a look here at the Euro USD, and it was a beautiful move yesterday. We really honored this support level at 1621, and we mentioned this several times in our daily reviews, how it's just trading in a range, and it's just really very basic type of trading. Okay, nothing really, no stochastics, no MACDs, just really simple stuff here. Okay, as it gets exhausted into the down move, it's almost like the algorithms and the automated computers are trading the system, and every time it hits a certain level they start buying it out, and every time it gets to a certain level on the high side they start selling it off. And sure enough, that's exactly what happened. We rallied yesterday from 1621 to 1706-ish level yesterday. Now we're closing in at this 1743. That's our next really resistance level on the upside. Can it continue going up? Yes, it can, but as it's taking this breather here, this move may have been exhausted already, so just keeping that in mind. Now we're going into the FOMC tomorrow, so that's going to be a little bit of a indecisive position for which the market is going to be directed. So just be aware of that as we continue trading in that direction. Now looking at the GBP USD, we're pretty much flatlined. Okay, nothing really to write home about. We're trading in a really tight range, and really you want to stay away from it until you see some sort of breakout either on the upside or the downside. But right here you see that it's really trading up to par, very close to its moving averages, and not really moving in any specific direction. However, looking at the USD Swiss franc, we're closing in on the support level, a 99.69-ish level, as you can see here on the bottom area, and we're on the RSI. We're right there. If we look at a daily chart, you can see that a little bit better. And we had this massive sell-off here, as you can see, but ultimately, I still think that we're going to trade in this range, okay? So even though it looks like it's getting weaker and starting a downwards momentum, okay, it could very well bounce off of this later today. So just keep that in mind as we continue trading there as the week progresses. Now jumping into the USD Japanese yen, just a moment. There we go. And we're trading at 111. Okay, now nothing really, bouncing here. Okay, but it does look like it's consolidating here. So if we do get a move up on the upside, that might actually frustrate as the week progresses with 11, maybe 42. If we do break above that, then that would be kind of interesting to jump into on the high side. But really, the monetary policy statement, really a non-event, as you can see here, ultimately being factored into the market as things are progressively opening up this week and the news is coming out. Now jumping into oil yesterday, we had a nice rally. Okay, we're above $70 a barrel, just shy of that at 69.96 this morning, and it looks like it's starting this mild rally. Okay, the reason I say mild rally is because as we've had this decent sell-off, this is just churning upwards. Okay, not really going with some massive momentum. So as the week progresses, I would like to look at this to see if it does get back to the 71-ish level. If it does break above $70 and continue that momentum, I think that we can continue going back up to the 71. But this is a nice trend line that you can keep to see, if it does break this trend line, then it's a possible short on the downside as a correctional move is bound to happen as the markets are increasing their output of oil as we speak. Now, jumping into the Dow Jones, we had a little bit of a sell-off yesterday. We're trading at 25,300-ish level right now. And, ultimately, this is to be expected. We're going into a consumer confidence number later today, which is going to be at 4 o'clock, which is a very important number. And I think that's going to weigh in a lot into the markets. We're also going into the FOMC rate statement tomorrow. So, with these two factors, the factor we're selling off here is just a little bit of a cautionary tale for the market, just to, protect their position, so to speak, as we go into this massive number. Now, looking in the NASDAQ, yesterday we sold even further. We're trading at 7,200 points right here, just a little bit shy of what we thought would be support level, but I still think that it may still rally as people are taking some money off the table in the high-tech related stocks like Amazon, Facebook, and Google, as we've mentioned before. If we take a look at those, you'll see that they've sold off quite considerably as the market has digested some of the news on Facebook, and we've made new highs for the year. So this is completely natural of the market to take the sell-off. We're selling into 1219 here at Google. As you can see, if we do fill this gap, I think we can start rallying up a little bit. It's going to get a little bit more interesting once it gets to the 1200-ish level. But this is really natural of the market. Okay, altogether, if we look at a weekly chart, guess what? You're making lots of money here. All right. So the markets have corrected themselves, but they're on the upside. We're looking here at Google from 2014 to where we are right now. It's gone over $1,000, okay, per share over the last 4 years. So amazing rally for Google. You could say the same thing for Amazon. If you look at a 4-hour chart, ultimately this is a massive rally as we continue into the summer months, which is really not indicative of this type of market of the summer. Usually we sell off and we kind of drift apart, but as you can see, we've had nice rallies this summer. Okay, now jumping into the DAX, as you can see, also we've gotten a little bit stronger here and have started somewhat of a momentum on the upside, but still resistant at this 12,857-ish level, okay, on the upside. And I think if we do hold this line right here at 12,758-ish level, we can continue rallying on the upside. But just keep in mind, that markets are a little bit shifty this way, okay, especially as we go into major news events like we are this week. I would take a cautionary tale. Now, lastly, I just want to discuss Bitcoin. It had a nice rally last week, but just looking like it's drifting off right here at 8,000. I would say that 78.41 is a nice support level for it. So just keep an eye on that as that progresses throughout the week. But you could see that it's holding this support line of this Fibonacci quite nicely. So keep that in mind as we continue to trade that, throughout the week. This is Fred Razak. I want to wish you guys a great trading day. Thank you.